We've got a draft taxation determination, TD 2023/D2, and it's about aggregated turnover. So it's good news in the sense that it clarifies how this rule will apply. Now, aggregated turnover, as I'm sure everyone online is aware, relates to what entities are connected with you. And the connected with test is used in lots of different places in the tax law. Aggregated turnover is one of them. We use it a lot in small business concessions, things like that. Most of the tests for whether an entity is connected with you, leaving aside discretionary trusts for the minute, but most of the tests rely on a 40% control. So typically, if you have 40% or more of the income, capital, voting rights of an entity, you'll be taken to control that entity. There is an exception, and that's what this taxation determination is about, where you can have someone who has a percentage of more than 40%, but less than 50%. And in certain circumstances, the commissioner can exercise a discretion to treat that person as not controlling that entity. So I've got an example for you. It's here on the screen. We've got our little orange person. They own 45% of this test entity. And then we've got two blue people. One owns 20% and one owns 35%. So on face value, you look at that and you say, well, orange has more than 40%. So orange controls that entity. That test entity will be a connected entity of the orange person. But if we dig into the facts a little bit more and we find out that the two blue people act together on everything, that is, they run this business together, they make all their decisions together, they never act independently of each other, then actually they have 55% between them. So they're really the ones who have the swinging vote, if you will, the control over this entity. So you can apply to the commissioner in this situation and say, I know I have 45%, but the other holders, they are between them actually controlling this entity in real fact. So it's not me, it's them, in which case the commissioner can treat the test entity as not being a connected entity of the orange person. So this is just clarifying how that operates. There's a nice example in there. If you're looking at connected entities where you've got someone of more than 40%, but in actual fact, they're not really the mastermind of that entity, you might be able to get out of the connected entity based on this.
I think another area where, particularly in our practice, where we'd see it is where you've got someone trying to apply the small business CGT concessions. And by being able to disconnect an entity, it means that you're looking better in terms of those aggregated turnover tests.
So, or maximum net asset.
Yeah, yes. Or maximum net asset, yeah.
Beautiful. Yeah. So don't just always look at the 40% and assume they're core. Yeah. That's for me.